What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 7th of 2018. Well, folks, I hope you all are having a wonderful day wherever you are, and today it's time yet again for another daily update here on the DataDash channel. And as always, we're going to be taking a look at market valuations as well as doing some technical analysis on the market leaders. Outside of that as well, though, we've got a variety of things we want to talk about. I want to spend some time not only to analyze what price levels I'm looking for in Bitcoin, but I also want to talk about some key fundamental factors that we need to watch and could provide some opportunity for a little bit more positivity in the market. Outside of that as well, though, we have a lot of different things to talk about in traditional markets. I got to spend some time, as always, to talk about the continued developments with Deutsche Bank and the massive money laundering scandal with Danske Bank as well. We also want to spend some time to talk about the Chinese real estate market, the desperation we're starting to see, as well as the tightening squeeze on credit in the Chinese shadow banking sector. And last but not least, talk a little bit about the recent announcements from OPEC and what it means for oil markets going into the next few months. So we've got lots of things to talk about. Let's not push it off any longer and dive right into the update. So to start off, guys, as you can probably see, I hate to be the bearer of bad news, but I think you guys already know this. Crypto markets are still on the decline. Again, on relatively thin volume across the board here for most cryptos, but at the same time, nonetheless, we're not seeing any positive price action. You've got a few oddballs like Waves and Factom up. Bitcoin SV is probably the only well-established crypto that's really doing well in this market, that's got a few $1 million trading in volume, and I don't doubt that it's going to continue to probably run up in the short term as a speculative play as people get more concerned about what we'll talk about later on, which is one of the fundamental factors that makes Bitcoin unique, but we'll talk about that in a little bit as well. Going over here to market view, it looks like we're heading back towards the lows of where we saw cryptocurrency market cap go back in September of 2017. It really seems like we're getting a really solid final flush here down to the support level down here. And again, it was an area as well where we found resistance previously on Bitcoin's first major rally, the first major run-up in 2017, closing at around June. But again, guys, I'm not going to try to pick any bottoms here. I'll let you all know some target areas that I'm looking for. I've already made some additions to Bitcoin as it's gone down, but I'm going to start waiting until we actually get a trend reversal. I don't think crypto is going to zero, but at the same time, we can see that volatility is high. We can see that the sell-off is continuing, and you don't want to trade against the trend, guys. If you can, for example, wait for Bitcoin, let's say, for example, a few days ago, Bitcoin's price was at 4,000. If you can wait for 3,000, you're getting a very solid discount. In that case, you can add a lot more Bitcoin towards your long-term portfolio if you're aiming to add at some point or another. So that's the key thing to keep in mind here. As much as I love Bitcoin and I love crypto, you want to make sure you get a fair price and stuff, or get the best deal you can. Anyways, going on here to Bitcoin dominance, not much to say. We have not reached the peak of Bitcoin dominance of 57%. Altcoins have actually held quite strong in this correction. However, still about 2% away from that. We are seeing a rising level in Bitcoin dominance. So I think in the final flush, you could see it come back up to the 57% mark. But I think then at that point, it's going to get to the point where things are ready to probably see a reversal, meaning that people will be taking a little bit of risk taking. You might see some buyers coming in at around the $3,000 range for Bitcoin. And obviously, altcoins will follow if Bitcoin gets enough strong buy support at those levels. But we'll have to see. Going on, though, I want to spend some time to talk specifically about Bitcoin's price. It's not really necessary to do TA on a lot of altcoins, guys, at this point. I really don't want to get everyone in the mantra of like trying to make trades right now, because it really isn't the market. It's not a bullish market. There's not a lot of hype around a lot of projects. Not to mention as well, it doesn't matter, if you think there's fundamentals tied to it or if it's more momentum driven on speculation. Right now, there is none of those. Okay, the fundamentals are definitely developing, but at this point, cryptocurrency is still, in the sense of the capital that drives this market, it's a speculative driven market, right? So I don't want to sell you guys on anything. I want you guys to keep quite neutral at this point. But at the same time, we are at a discount in this market. I think, again, I want to go back to a point. I made a video a while back, and I think people thought I was capitulating. I'm not, guys. I'm just saying wait for the proper change in momentum, right? Cryptocurrencies are very clearly in one direction over a long period of time, as they've been in a bear market for the past year. They were also in a bull market for about 1.5 to 2 years. It's just a matter of waiting for that trend reversal. Everything, though, is starting to check out quite nice that we're getting towards, really the worst case scenario. What I mean by that? Well, let's go ahead and take a look at some key long-term indicators on the weekly and monthly. This is something I do not only in traditional equity markets, but it's something that a lot of the major traders who have traded in Bitcoin for a very long time, back in 2011 to 2013, will utilize in order to predict longer term swings. And they don't look at the daily, they don't look at the hourly like a lot of people who are trying to trade crypto. They look at the weekly and monthly. And the reason being is that you can pick up on some very key similarities, not to mention just some key signs that something might be legitimately oversold as it was overbought in the past. So we could see, for example, on the weekly here, Bitcoin remained heavily overbought as it did in the past as well. And then as always, we have, or as we tend to have, sharp corrections going in to these really steadfast run-ups. So let's take a look at some of these indicators here. Well, we've got the RSI down here in the exact same range we saw Bitcoin back in 2014 to early 2015, the range in which Bitcoin bottomed around $170 to $200. It's very interesting. Not to mention as well, price is going steadfast towards the 200 week, which again is a point where Bitcoin was able to hold last time. Now, obviously, you got a little bit of price dip around here. However, we quickly recovered. And after that, once we got generally a double bottom here on the 200 week, we got a rally in Bitcoin. So we're getting close to that. That level is at $3,163 for this week. Could obviously rise up over the next week, compounding in the last 200 weeks. But not only that, I want to spend some time to take a look at the monthly, because I think this is really the more key indicator to watch. Monthly RSI, very similar in the sense that Bitcoin became overbought in 2013 as well as over here in 2017, and then came down to a level that really isn't even oversold. Again, this is Bitcoin for you. Bitcoin had dropped around to the 45 range in the RSI, and look at where we are now. We're in the mid 40s range. This is exactly as history has repeated, guys. And I don't think you're going to see this drop much lower. But in this case, I want to point out another thing. Look at the monthly here. This is the 50-month, another key indicator again for long-term corrections or long-term sell-offs in markets. And we can see here in Bitcoin it played out quite nice. Not only was this the previous resistance mark here where we had the breakout for Bitcoin, but it was turned into support and rode along the 50-month. And we also got a burst of volume coming in. Take a look over here as well. We're very, very close to reaching 3,000 here. 3,000 was the first major resistance point before Bitcoin started to continue to rally throughout the year. Right? It was the first top of the market. I remember, if you guys go back to those old videos from the channel, back in July of last year, it was really, really fun. It was a crazy time period, but that was really when crypto was starting to pick up, and the word got around in a sense. And I think you're going to probably start to see at least some contested support there. I don't know if it's going to be the bottom of this cycle, guys. I'm not going to try to call bottoms in this market, but that's the next level that I'm going to get interested in. We're really not that far away. It's another $300 to $400 here, depending on what exchange you're looking at, to knock down to that price, and it's a big even. So do not disregard the big even levels, guys. Those are where you start to see buyers come in. It's human nature in that case. But I'm not saying that 3,000 will be it. I'm just saying keep an eye on it. If you start to see some momentum in there, possibly might be a point of reversal, at least in the short term. But again, the RSI on the weekly and the monthly, the moving averages on the monthly and weekly, looking really nice. These are the patterns you want to watch. But again, not doing any trading or investing right now, not stacking up on altcoins. So what do we want to watch at the moment? What's the key thing here that really could get us on edge about Bitcoin in the long term? Well, it's obviously what makes it unique. Open source code, guys, that Bitcoin runs off of, it's genius. It's a really interesting system. But Bitcoin itself is only really unique as a cryptocurrency because of two things. A, the rate of adoption that it has, in the sense of people who know about Bitcoin. If they know about cryptocurrencies, they may have Bitcoin wallets, they may hold Bitcoin. But the thing that really makes it unique and powerful is its hash rate. Now, I don't want to scare you guys with this chart. I think a lot of people have looked at this as a recent and are panicking. But really, Bitcoin's hash rate is back to where it was in July and August this year, pretty much towards the end or the middle of the summer. But we have seen a steady decline in Bitcoin's hash rate. In fact, we've gone from around some of these peaks where Bitcoin hash rate is sitting around 60 million terahashes all the way down to 37 million. And at the bottom here, it was almost practically cut in half to 31 million. So with these kind of depletions, a lot of people, are wondering, Is Bitcoin A, becoming more vulnerable to 51% attacks, and B, are miners giving up on Bitcoin? And I'm going to answer this too. A, on the first one, yes, but it's still not extremely vulnerable. It is obviously more vulnerable because of the fact that there's a lower hash rate, and that obviously has cut Bitcoin's immutability or security in that case by half. But again, bear in mind, we were back here during August, so I'm not too much worried about that. And the second thing is, in regards to Bitcoin and miners in this case, are miners abandoning Bitcoin? It's not so much that they're abandoning Bitcoin. It's really a question of profitability, guys. A lot of miners in the cryptocurrency space really do believe in the mantra of cryptocurrencies, and sometimes they'll even mine at a loss. But most people operate like a business. There's a lot of miners I know who got into the mining business obviously wanting to make money, and they go through and they see, can I turn a profit on this? Now, basically, we want to talk about the importance of difficulty adjustment at this point. As the amount of hashing power has started to get cut off, difficulty adjusts as well. It happens on a periodic 2-week basis, generally speaking. So in this case, we can see that we are on a nice steady uptrend throughout the summer where difficulty almost nearly doubled. And now we're starting to finally see a reduction. And as difficulty continues to decrease, profitability becomes much more likely as difficulty drops. But it's a matter of difficulty dropping enough in the sense of price dropping enough. So if the price drops are outweighing the difficulty adjustment drops as well, then you might want to wait patiently. At least in the case of miners, they're probably better just buying it off the exchanges at that point. Hey guys, sorry, I ran into an issue with my recording software. Just want to summarize my point here so we can get on to traditional markets. I know a lot of people are worried about the hash rate, but there's two things to keep in mind. Not only have we been increasing even after a 50% correction, we've increased for the year on Bitcoin's hash rate, but to really put it in perspective, we've really increased since this time last year. We've gone up about 2, 3, or 4-fold on Bitcoin's hash rate. So really interesting to see that even during a bear market, Bitcoin's hash rate has been going up. More people are mining Bitcoin than ever before in this case. So it's really nice to see that, even though, again, we've had a pretty big depletion from October of this year, and really where we were seeing the peak in the hash rate. But again, proves that more people are mining Bitcoin. And then along with this as well, this is understandable, guys, as we have more of a difference or divergence between the difficulty as well as the market price. If difficulty isn't dropping as fast as price, then obviously more people are going to be shutting off the miners. This has happened before in Bitcoin's price back in 2009, 2010, when you have a big difference between the price and the hash rate in that case. So again, very understandable for something like this to be happening. Going on here, though, I want to spend some time to talk about traditional markets and talk about what we've got to talk about, and that is Deutsche Bank. Now, you guys know I've been critical of Deutsche Bank for quite some time, but boy, have the developments of this money laundering scandal continued to build up. So let's go ahead and provide some perspective on this, guys. As we all know, last month, Danske Bank had a whistleblower that came out and talked about how Deutsche Bank might have laundered anywhere from $150 to $234 billion of suspicious funds. Now, this alone was already concerning, guys, and there was a pretty decent amount of evidence to back this up. But get this. According to the Financial Times, which cited an internal Deutsche Bank memo, Deutsche Bank cleared a total of nearly $200 billion from Danske's Estonian branch between 2007 to 2015. So we got to really put this in perspective, guys. Not only does this mean that Deutsche Bank alone cleared more than 4/5 of the suspicious funds flowing through the Danish bank and its Estonian branches, but over an 8-year period, Deutsche Bank processed some 1 million transactions, according to the memo, and never once bothered to question the provenance of these massive sums of money, which dwarfed the annual GDP of Estonia. So basically, I'm not here to insult Estonia with this comment, guys. I just went to Estonia. But the important perspective that you have to take into mind and put yourself in the shoes of a financial regulator, it doesn't take much knowledge to know Estonia is a small country. It has about a little over a million people, and it has a declining population because a lot of people are moving to Finland and other areas where they can get a higher pay in regards to income. But Estonia is a great country. I just went there. They're one of the countries that was under the rule of the USSR and has really flourished under capitalism. But man, you gotta give some credit to this. 1 million transactions, yeah, sometimes, guys, I just happen to take 1 million transactions in business, and sometimes tens of thousands of dollars, if not hundreds of thousands of dollars, and I just don't know where it's coming from, but I don't really care. That's just very unprofessional. If this was really, if this wasn't intentional by any means, to go on watching, I get my transactions frozen sometimes for the stupidest of reasons. How can Deutsche Bank go through processing 1 million transactions without stopping once to think, where are these transactions coming from? Especially to the degree that was dwarfing annual GDP of Estonia. Now, of course, this was over an 8-year period. Fair point to take into mind. But this kind of transaction volume should catch people off guard. Even one-eighth of what we could see here, over an 8-year period. If you took 1/8 of that and compared it to something like the GDP of Estonia, or the general business volume that should be going through there, again, this is very interesting stuff, guys. And I think that Deutsche Bank, again, is already in a position where the fines that they could face for this are not going to be pretty. They've already faced 18 billion in fines since the financial crisis. Where are the fines going to be for this? I can only assume that they're actually going to be quite heavy hitting. I know, guys, it's tended that banks walk away paying little to nothing for corrupt activity. This is something that is a little too obvious and should have been apparent to Deutsche Bank, and I think the financial regulators are actually not going to treat the situation pretty. There's sometimes where they have to actually stand up and enforce decent financial penalties on these kind of companies. But again, we'll have to see. I'm quite neutral at this point, but boy, $234 billion. Yikes. Not a pretty picture for Deutsche Bank, which again is already struggling to make that transition from derivatives exposure to a potentially profitable model of doing a commercial lending to consumers. Now, I want to spend some time here to talk about the naked truth of China's real estate shutdown. I really like this article here because this is the kind of stuff we spotted in the cryptocurrency market when people were getting definitely desperate, and I can tell you I've been to a lot of conferences where I've seen this. The naked truth of the real estate market in China and the slowdown in its real estate market. Now, as we all know, most markets across the world have been on the decline over the past year. The U.S. has actually been holding up quite strong in regards to equities and asset prices. However, in Asian markets, we've seen not only a stagnation in real estate, but we've also seen a pretty strong depletion, about 30 to 40% on all major indices in Chinese markets. And this has been the continued, slowdown in economic growth, not to mention just a decline in assets that have been quite overvalued for some time in China. But they're getting to the low of having to market their real estate properties with pretty naked girls in this case. Now, let me tell you guys something. I want to tell you guys something. I can tell you that in crypto, this has happened a lot. And no, not so much to the degree of being naked and doing body art, but I'll tell you, I've seen a lot of people do this in crypto, and I can tell you as someone who appreciates good marketing, this is probably the biggest waste, A, of money, and B, one of the biggest insults to your clientele, because to me, it's like you're selling the idea that all I really care about is seeing pretty ladies naked, and I don't care about your product or service. No, I'm coming there to buy your product or service. If this is how you have to sell me, it obviously shows me that you're not only desperate, but you have something that you can't seem to sell. And I don't want to go too far into it, guys. I think it's just a good perspective on just how desperate the Chinese housing market is right now. The amount of price drops that have been coming through on some of these major condos, condominiums, and properties in China have been dwindling at a rapid rate. And we can see there's a big reason for this. Not only have you gotten a market across the world that is seeing a little bit of a slowdown in growth, a little bit of a drop in optimism, not to mention, China has been continuing to ramp up the regulation on the shadow banking system, which has propped up Asian equities and Asian housing markets for a very long period of time. And we're now starting to see the reversal. Instead of the credit expansion, we're starting to see a credit depletion. And this is obviously going to have a weight on the demand for houses, obviously. If you have a decline in mortgages, people taking up money to borrow homes, you're removing buying pressure. Most people don't go out and buy straight cash. They buy through a mortgage. And in this case, to see a credit change in the shadow banking system, which played such a big role in Asia, predominantly in China and India, this is going to have a major weighing effect. So again, proving again on the surface, you see some of the craziness. This gives you a good perspective of what's going on. Not to mention, really makes me sad when people think that the only way that, in this case, a woman can work in like real estate in this case is to freaking work by selling your body. That's just to me is a low ball point. But again, there's some people in the business world who really don't have a good moral or ethics code in this case. So yeah, it doesn't surprise me. Anyways, going on here, let's go ahead and talk about the last major piece of news here, and then we'll take a look at a little bit at price action. OPEC agreeing to a larger than expected oil cut after a marathon of talks. I want to go on here to talk a little bit about what's going on in OPEC with the larger than expected cut. This has been some positive news, but again, with OPEC, you never know if it's going to be truthful or honest. Long story short, OPEC, the major oil cartel, has agreed to a 1.2 million barrel reduction per day in regards to oil production, with OPEC itself shouldering 800,000 barrels of the burden in regards to cuts. Now, again, no country wants to cut. They want others to cut, and it takes a long time for these things to happen. However, supposedly crude oil has surged 5.4% over the past few hours, and we'll take a look at that on the chart here in a little bit. However, it's important to really understand here just how much oil, OPEC in this case, is starting to lose in the sense of its market share, not to mention its effect on the oil markets. It used to be that OPEC ran the show. However, let's go ahead and read this quote here. OPEC, or more precisely Saudi Arabia, has been the head honcho of the oil world for nearly 6 decades. Yet these days it seems unable to make a decision without Russia's blessing, let alone without risking the wrath of the U.S. president. And this really speaks to an important point, guys, in geopolitics. Not only has the U.S. ramped up production over the past few years, we have been a major producer, one of the largest producers of oil and natural gas here on the world stage as of recent, with new technologies like fracking and things of the like. But along with that as well, you have countries like Russia, which their economies have been stagnant over the past few years. GDP has not been growing, and that's because they're heavily tied to commodity markets. And that tells you something. Russia will fight tooth and nail to defend the profitability of its energy production, its energy exports. It is not going to cut production, because if it does, it is already going to continue to see a further decline in its overall markets. It does not want to see that. Putin is gun-ho on that. And if you want proof of that, there's an important video that I think came out a few years ago called Putin's Arctic Ambition. Probably the thing I'm most fascinated about with Putin, and that is the continued expansion into the Arctic region to continue gaining more natural resources. This is really what Russia's economy drives on. And OPEC is getting some serious competition here, and they can see that other nations are finding ways to produce cheaper like they have and are not backing down on cutting. But we can see here as well that above all, we can see that Trump has definitely stated he wants to see lower oil prices in this case. This has been a position of his for a very long time. It's understandable. In the Western world, we like cheap oil. So I think you're going to see more and more steady competition here with OPEC over the next few years, and oil prices are not going to be seeing the crazy highs of $100 barrel, as we've seen in the past in the early parts of the 21st century. I just really don't see it happening anymore. And I see a continued decline here in oil prices, even with the production cuts. I think it's temporary relief. Going on to talk about that, though, go ahead and take a look at the oil chart here. Again, we've been seeing a sharp 2-month decline here, and it looks like we're repeating history here, going down towards the support range that used to be previous resistance. So I'm not going to touch any oil stocks until we see another 20% depletion. I want to see oil go down to $40 a barrel in this case, and we might even see it come down to 30. So I'm going to remain patient in that regard unless I really see some value coming into oil markets. But again, we didn't get anywhere near it, and I don't think we're ever going to come back up to this range of $100 a barrel until we really find out that reserves are dwindling, or if we have another peak oil, phase in the United States where everyone's worried that, oh my gosh, oil's going to run out. We're finding new ways to drill it. We're making it cheaper, and because of that, I really don't see oil going up to those highs again. Going on, though, let's go ahead and talk about equities. Now, I want to mention something, guys, that was very interesting. Actually, I'll bring up the actual NASDAQ composite here for those that are interested. In the recent newsletter, we did a piece, back a few days ago, talking about if the NASDAQ were to top out here when the market opened on December, and we weren't able to get above 7,500 points, that the market would roll over. We could see here that we had a topping pattern forming on the NASDAQ. And I said that if the market were to not be able to close above this level, in this case, it would be a bloodbath. And we've gotten that, guys. We're repeating history here with this lowering top formation here. I would expect a much further breakdown. We can already see that the market is down here for the day. However, again, equities have just been printing lower and lower highs here. It's not a good sign for the market. So again, this is not just the NASDAQ. You can take a look at the S&P 500 topping out at this level here and continuing to test the lows around this range. We can see the Dow Jones Industrial Average as well, playing the same game, lowering highs here. Not a good sign to see. And the Russell 2000, the small caps index, not even testing the topping formation here. We couldn't even make it that high. We're now well below the 50-day here, getting shot down and continuing even lower here on price. So again, showing some pretty big signs of weakness, guys. Again, I'm waiting patiently. There's going to be a value opportunity here on some of the major indices like the Russell. I'd definitely be willing to do like a leverage trade when it comes down to this long-term line, where I think we might find some support, but that's still a few hundred points down, or you know, a little over, I guess, 100 points here on the Russell. I'm waiting patiently on this. I want to see it oversold again. I want to see prices dwindling, and I want to see some of the risk that's been in the market being stripped away, providing opportunity for risk taking later down the road. But I think we need a sharper correction here, guys. I'm remaining patient and vigilant. I'm still focused heavily on commodities at the moment. There's not too much change in gold and silver and uranium. URA, we're still waiting for the breakout. So in that case, I'm not going to waste your guys' time or ramble on there. Today, I'm going to cut it short. Probably we've done a lot of talking. That being realized, though, if there's anything that I missed in the video, guys, definitely leave it down in the comments down below. But until the next one, thank you all so much for watching. Thank you all for sticking around and hearing me ramble. Until the next video, I'll see you all in the next one. Stay tuned.